good evening, ladies and gentlemen, and welcome to the second edition of our webinar series, Ghana, an ideal destination for diaspora investment. We've got a really action-packed couple of hours planned for you with some very special guests. But before we get into that, maybe I'd just like to say a special thank you to Mr. Kobi Anda, the Managing Director of Bank of Africa, for supporting this initiative and connecting us all this evening. And then another very special welcome and thank you to Robert Kooston, the Chairman and Founder of Guardia Monetary Fund, and the diaspora network of which we are all supporting and hope to learn a little bit more about this evening. So once again, I'd just like to welcome everybody. My name is Letitia Brown. I'm going to be the moderator this evening. It's good to see some faces that were with us last week and also to see some new faces on the call as well. I'm really excited about today's session because we're going to get into some of the technicalities of what it means to actually set up and establish a business here in Ghana and also to make investments here in Ghana. So without any further ado, I'll take this opportunity to just introduce the panel. Just bear with me 1 second. Okay, so we have Dr. Abdallah Ali Nyake, who's going to be on the line with us this evening. We have Mr. Abbas Mukhtar, and we have Mr. Kalis Baidu. We're going to be getting into the technicalities of establishing a business. We're going to be learning about Ghanaian tax laws, what a non-resident should look out for, and we're going to be looking at what you need to know about business regulation, should I say, and registration in Ghana. And we're also going to be looking at the structure and regulatory environment. So if the first panelist is ready, I would like to invite Abdallah to come on the line.
Thank you very much, Letitia. We welcome all of you. Welcome all of you to this session. I will take off looking at the Ghanaian tax laws and what a non-resident should look out for. To start with, I want us to look at the tax system we have in Ghana. Globally, there are two main types of tax systems, the territorial and the worldwide. We used to have the territorial, which looked at taxing income that has a source in Ghana. But now we've moved under the new Income Tax Act at 896 to look at the worldwide system. But the worldwide system is applicable to only residents. So non-residents are still being assessed based on the territorial, meaning you are liable to tax in Ghana if and only if the income has a source in Ghana. Otherwise, you are not going to be subject to tax. So we have a fusion of both the territorial and the worldwide income basis. And if you take our laws, especially Section 11 of the Act, it shows that once you have a chargeable income in Ghana, you are going to suffer a tax. And like I mentioned, if you are a non-resident, there must be proof that the source of the income is from Ghana before you pay tax. So what this means is that if you have any income which is not having a source in Ghana, you are not going to pay any tax in Ghana. So they will be looking at all sources of income, whether you are exercising an employment, an investment, or you are carrying out a business in Ghana. That is when they will try to look at whether the source is Ghana and that you have to pay tax on it or not. So that is the system that we have, a fusion of both territorial and the worldwide income basis. Now, I made mention of assessable income and chargeable income, so I wish to explain that to you. If we talk about the assessable income, we are looking at the total income that is accruing to you before any deductions. But then if you are earning income, there are certain deductions that are available to you. If you are running a company, for example, then the income would have to be reduced by all expenditure incurred wholly, exclusively, and necessarily in earning the income. And so that would then lead you to arrive at the chargeable income. It means your total income after any deductions available to you either by way of a deduction, a relief, an incentive, all that would be taken out. Now, to understand whether we are resident or non-resident, we'll look at section 1011 of the Act. Yes, Letitia, you have...
Sorry, sir. Sorry to interject. Some of the participants are struggling to see the slides. Could you try to put it into presentation mode? It's along the bottom of the, yes, just there. Fantastic.
Okay, so you are okay now?
Yes, perfect. Thank you so much.
That is fine. You are most welcome. So when you look at the section 1011 of the Act, Act 896, it details out who a resident individual is. And it says that either you are a citizen of Ghana who has a permanent establishment in Ghana, or you have a permanent home in Ghana and you are out temporarily. So you are not entirely out of Ghana for a whole year of 365 days. Or you are an employee of Ghana but posted outside Ghana for work, especially those working with the embassies, for example. Or you are in Ghana for more than 183 days. So if you take the totality of who constitutes a resident person, once you don't fall into that category, then you are a non-resident person, meaning you are out of Ghana for more than 365 days in a year of assessment or 183 days. So that is where you position yourself. Then we also look at what sources of income will be subject to tax in the case of a non-resident. If it is income you are getting from business, then we are looking at whether you've earned any service fees, you've received any consideration in respect of any trading stock, or you realize any capital asset, or you receive a gift, then all would be added to your business for tax purposes. And if we are looking at your sources of income from investment, then attention is on dividends, interest, natural resource payments, rent, royalty. But we have a lot of non-residents who have property in Ghana they have rented out to businesses to use for either commercial purposes or for residential purposes. So the tax people will be looking at the income you are earning from these properties. And then if you realize any of your investments, they want to know gains you've made and take the appropriate tax from it. And so when you are looking at your income for tax purposes as a non-resident, you always want to see if there are any available reliefs or deductions to reduce the impact of the tax on you. Or you also would want to look at which sectors would you invest such that you will not be subject to tax. Because our tax law provides that interest earned by an individual on a savings account or a security that is issued by the government, be it treasury bills or bonds, is exempt from tax. So you may be looking at putting some money by way of fixed deposit and savings with Bank of Africa, and I'm sure Mr. Kobianda will be happy enough to give you a lot of interest for which you will not pay any tax. Now the taxes, the rates of taxes that are available and operating in Ghana, it's dependent on the activity you are engaged in. But the normal tax rate is 25% for companies. But if you are engaged in the hotel industry, you pay tax at 22%. And if you are certified to go into the construction of affordable houses in partnership with the government, that is through the Ministry of Works and Housing, then you are going to pay 1% during the first 5 years of your operation. So it's a concessionary rate of tax. And it's the same if you go into agro processing business. And then if a financial institution earns any incomes by way of interest from lending to a Greek, for example, they pay 20%. And then if you engage in non-traditional export, you pay tax at 8%. The traditional exports of Ghana, traditionally gold, timber, bauxite, manganese. So if you look at all the other sectors, they fall under non-traditional. And if you invest in establishment in the free zones enclave, you are exempt from taxes for 10 years. And after the 10 years, if you sell in the local market, you pay the existing corporate tax rate. If you export, you pay at 15%. And then in taxation of corporate entities, the tax law separates the owners of the company from the company. So the company will suffer its tax as an entity. The directors will suffer their taxes by way of directors' fees that they are earning. And then shareholders will also suffer their taxes by way of withholding tax on the dividends. We'll get to the rates that are applicable for each segment of the inflows. If there's a partnership, you are going into a partnership, income is not subject to tax. It is rather distributed to the individual partners and they pay taxes as individuals. Now to the withholding taxes, we've given you the item being the source of the income, the rate applicable. And when we say person, we are referring to resident and non-resident. So when we say both, it means that whether you are resident or non-resident, it is the same rate of tax that applies to you. And we also indicate whether that tax is a final tax or a payment on account. If we say a tax is final, what it means is that when they are paying you and they withhold the rate of tax on it, all what you earn is not subject to tax again, the net that is given to you. So if you invest in Ghana and earn dividends, you are going to pay 8% withholding tax. So whatever is left and transferred to you is not subject to tax again. And so it applies to both resident and non-resident. If it's a natural resource payment, the rate is 15%, lottery winning 5%, service fees or insurance, if you're a non-resident, is 20%. And if you're a subcontractor for petroleum operations and you're a non-resident, if they are paying you, they will withhold 15%, and whatever you earn is not taxable again. If you're a non-resident, you supply goods or services to any business in the country, in paying you, they will withhold 20%. You are not subject to any tax again. And then we have that for transport operations. The next two slides are for residents. So if we are dealing with you non-residents, of course, it wouldn't apply to you, but we provided you to you as reference material if you happen to want to look at the position in Ghana. So for the rent and the rent I mentioned, if it's residential properties, you suffer 8% withholding. And then if it's for commercial purposes, the rate is 15%. And for those who may be coming down to do part-time teaching and research, it means that counterparts who are resident are 10%, but you will be at the withholding for a non-resident of 20%. So that is what we have for non-resident. Management and technical service fees, if they are paying you, you suffer a 20%, and then you go with the remainder, no taxes. If you earn interest income is 8%. So all your investment you make with Bank of Africa, I'm not sure MD, Mr. Kobe, will take more than that. If he does, please, let's go after him. Short-term insurance premium is 5% for non-resident. Then when it comes to customs, we are now under the common external tariff, which the ECOWAS region has come up with. We signed on in 2016, and it makes the provision of the ranges of duties on imports between 0% to 35%. But the actual rate that would apply to whatever you want to bring into Ghana would depend on us looking at the harmonized code, the harmonized system code, and we can then see what is applicable. So if you engage in any business in Ghana that would produce what is being imported, then you are likely to suffer excise duty, because the idea is to even out the playing field for both residents and non-residents. And if you are operating in Ghana too on any business, then there is a need to look at the threshold of your turnover for purposes of registering for value-added tax, because there is value-added tax on the supply of goods and services. But then we look at the threshold. If your operation would not give you any income exceeding 200,000 within 12 months, then you are not required to register because you are below the threshold. But ideally, if you believe that you may pick up, because the idea is if you are not registered for VAT, you can't claim input taxes you are suffering by way of VAT. So sometimes you may not be up to the threshold, but you wish to voluntarily register to be able to claim your input taxes. So if you are non-resident, you check the boxes and you realize that you are within that threshold by your operations in Ghana, and there will be the need to register. Under free zones, I'm sure you have discussed under free zones or likely to discuss with the experts there. But what we are interested here is that if you want to go into any business where you'll be exporting more than 70% of your output or provide services in the free zones enclave, which will be made up of about 70%, then it will be good to think about the free zones because you enjoy 10 years tax holiday before you be suffering any taxes. And then you have a lot of exemptions there. You don't incur any import duties on raw materials and items that you are importing to do your business. The idea is to make you competitive in the international market. So if we give you all these exemptions, we expect your cost of doing business to go down, and then your pricing will be competitive in the international market, and then we can also get the needed foreign exchange. I'm sure you had discussions on GIPC. What we would say for the tax implication is that registering with GIPC, it will enable you to have some concessions by way of taxes, which the GIPC, I'm sure, has made you aware of. And so it is important you look at it. One area you may also be interested in is double taxation treaties, because the idea is that we want to ensure that you don't suffer double tax. You pay tax here and pay tax again back home where you are based. And so the countries that have double taxation agreements with Ghana are currently 13. There are some that have been signed on, but they've not been ratified by Parliament yet. So we have the UK, France, Belgium, Italy, South Africa. We are with Germany, Switzerland, Netherlands, Denmark, Morocco, Singapore. We are with Mauritius, and we have with Czech Republic. And the idea why you need this is that if you are having that double taxation agreement, you may have to look at what the laws say in the country where you are based. Because what we have in our laws is for Ghanaians who are earning the income in the treaty countries. So once you are also over there and will be earning income from Ghana, you may have to look at the kind of exemption you may have. Because in Ghana, we have the exemption method where you will not pay any tax on it, as against the credit method where we will give you a percentage of the tax you've paid in the foreign country. And then we have the deduction method where you can forego the first two and decide that all the tax you paid in the foreign jurisdiction, we will deduct it from the taxes you have to pay in Ghana. So you may compare that with what you have. Then the issue of charitable organizations. The Commissioner General is empowered under Section 97 to approve organizations to be charitable organizations. And the criteria that has been set out in the law is that you should be registered as a charity of a public nature or a religious institution of a public nature, or you are promoting social activities or sporting activities, or you're a registered sporting club. The condition is that you should not be engaged in political party activity, or your platform should not be used for political party activity. Sometimes when I read this, I smile because I see churches inviting aspirants and they manage to use the platform to appeal for vote. I wonder if the church leaders don't know they are opening themselves up to taxation. Because if you qualify as a charitable organization, the law says you are exempt from tax other than income from business. So if you conduct any business, you pay tax on the business income, and the remainder you can put back in the charitable organization. Then we have the same for clubs and trade associations. So if we have trade associations, I'm sure one of them is partnering Bank of Africa on this program. If you're a trade association, you also have exemption from tax unless you are earning a business income. And the idea is that you are putting together members to promote their trade activities. And you are being exempt because when your business grows through the trade association, of course, you pay taxes on those businesses. So the association is exempt because of the activity they do. We have the same for building societies and friendly societies. And here they are also exempt from tax, but the condition is that it is only individuals who are eligible to be members of that society. And also they shouldn't be engaged in any political party activity. The interesting thing is that if you breach any of the underlying conditions for which you are exempt from tax, the Commissioner General has the power to revoke the license or the permission he has given you and start imposing tax on you. So in conclusion, what we are saying is that as non-residents, we expect that you look for the benefits that are in the tax laws, depending on the area you want to engage in. And I'm sure once you have discussions, as you've had with Bank of Africa, they will direct you who to see, who to consult. And ideally, it's good you do a kind of background research work before you venture. Some go into it and then they are confronted with the taxes and they start looking for a way out. It will be a shade too late. And so a good and a fair appreciation of the tax regime would let you be able to strategize appropriately so you get maximum returns of any investments you do in our country and your country, because you are not entirely out. You surely may have dual citizenship. So welcome home and continue to do good business with Bank of Africa, which is my bank as well. Thank you for the opportunity.
Thank you very much. That was
You're most welcome.
Detailed and fantastic presentation from Dr. Abdallah Ali Nachia. Thank you so much, sir.
You're most welcome.
Very informative. We have a number of questions coming through for you, so I do hope that you're going to be staying on the line with us.
Sure.
Very interesting to hear that we only have 1% tax on the agro-processing sector at the moment. That makes it a very interesting and exciting space to want to enter into for potential entrepreneurs on the line. A few questions are coming in as to why. And I think it's because the government is really promoting this sector at the moment and wants to encourage people to participate. But we can get into more of those details after we've had all of the presentations, if you don't mind. So if you can just bear with us, participants, then we'll get there. Okay, so the next presentation is going to be by Mr. Abbas Mukhtar.
All right, good evening once again. And let me also, on my personal note, welcome you to Ghana. I'm particularly elated that you are interested in investing in our country for the prosperity of all of us. My mission is to just give you an oversight of some of the business registration and regulatory regime in Ghana. And this is rather a very broad topic. So try and be very laconic and narrow down what we perceive to be the most important aspect of this mandate. To start off, like we all know, Ghana, we have a very well-developed and elaborate set of legislations and framework for business registrations. For every key sector that we have a piece of legislation that governs how they conduct their activities. We also have dedicated and evolving institutions who have been mandated to regulate key business activities in the key sectors of our economy through registration process, licensing requirement, and of course, continuous post-registration supervision of the business and the sectors. Like I said, once again, I mean, this is a very broad one, so we'll be very brief. We would touch particularly on the companies, the Registrar General Department would also look at GIPC in some detail, as well as the Free Zones Board. So basically, for the purpose of this assignment, I have categorized the registration requirement into three. I will speak first of the incorporation registration, i.e. that is the process of bringing the business into being in Ghana. And this applies to both Ghanaians and non-Ghanaians, resident and non-resident. The second category is the statutory regulation or registration. This relates to requirement for businesses, which is universal to all businesses and normally applies just before they commence operations or in the course of their operations. The last category is what we call the supervisory registrations. These are specifically industry-specific requirements for businesses based on the particular sectors that they operate under. And in Ghana, like we all know, we have a number of companies or types of companies that you may be interested in setting up, we have the limited liability companies, which is the popular one. We have company limited by guarantees. These are normally used by non-governmental organization, not-for-profit organization. We have unlimited liability companies. We have parent partnership, sole proprietorship, and external companies. I believe, we don't need to elaborate on these types of companies. The only thing to mention is that whenever you are limited or unlimited, you have the chance to go either public or private. Public essentially means there's no restrictions on the number of shareholders that the company may have. You are also entitled to float on the stock exchange. You can invite public to deposit monies with you. On the other hand, when you are a private company, the shareholders are limited to just 50 members, excluding employees. They are restricted from going public, i.e. floating on the stock exchange. They equally cannot invite the public to deposit monies with them for returns. So for the purpose of registration or establishment of businesses in Ghana, the key legislations are the Companies Act 2019, Act 992, the Incorporated Private Partnerships Act 1962, and then the Registration of Business Names Act. The Companies Act was recently passed, as the name suggests, to repeal and replace our old 1963 legislation. It tries to introduce some innovation and to catch up with the trend, to catch up with the international trend with regard to anti-money laundering, among other things. It also seeks to develop some technology in the way companies are registered and supervised by the Registrar General. The mandate for the registration of companies in Ghana falls with the Registrar General Department. The department is a very big and amorphous institution with many other functions, including the registration of marriages and divorce. They also have a mandate for the registration of intellectual properties. They also administer estate of deceased persons. So fortunately, under our new Companies Act, a provision has been made for an autonomous registrar of companies with specific mandate to regulate the incorporation and activities of businesses and companies in Ghana. This is with a view to ensure and ensuring some efficiency in the way they exercise their mandate. When you want to set up a company in Ghana, what are the requirements? So we have outlined here some of the key requirements by way of documentations and information. So to begin with, naturally, you need to have the particulars of the company, the name of the company, the objects, the purpose for which the company is being set up, the address, telephone numbers, email address, etc. We also need to have particulars of the shareholders or subscribers. Similarly, their name, date of birth, professional background, etc. The key thing is that for all this, you need also each of these, whether the shareholder, the beneficial owners, directors, and what have you, would need a tax identification number in Ghana. And then we also need the particulars of the beneficial owners of the business beyond the names indicated, beyond the corporate shareholder subsidiary who are the ultimate owners and beneficiary. You also need at least 2 directors, one of whom must be resident in Ghana at all times. So basically, a director is somebody who has been mandated to direct or administer the affairs of the company. He or she does not have to be a shareholder. The directors also have specific duties. They stand in a position of a fiduciary relationship with the company, among other things. Then the new Companies Act also requires the directors to make a statute declaration to the effect that They have not been associated with any company that has been liquidated or gone into bankruptcy. They have similarly not been convicted of any offense relating to fraud or the collapse of any business within the last 5 years. The idea is that we want to sanitize the industry to prevent quacks from coming in under the guise of coming to invest, to rather take advantage of people. So this qualification is contained in the Companies Act, and then the new directors are supposed to make this statutory declaration. If subsequently it is found out that it is not true, then they would have committed perjury. We also need particulars of external auditors. You need a company secretary. Under the new act, the company secretary needs to be a professional lawyer or a chartered accountant or somebody who is otherwise competent enough to understand the requirements of company law and to be able to discharge them. And of course, the company needs a constitution or regulation or article of association, depending on how we refer to it in various jurisdictions. And then last but not the least, the company, if it's a limited liability company, need to have a stated capital. How much capital are you introducing? For this purpose, when we go to the GIPC discussion, we see that there are specific capital requirements for specific industry. The thing to mention here is that capital does not always have to be in cash. You could give capital otherwise than cash, i.e., you can use your building equipment and any other things as long as there's a formal agreement between the shareholder and the company itself. Of course, you need to also have a number of shares, whether an authorized and then the stated shares. So having spoken about the companies, now we talk about the external companies. External companies are basically companies or branches or offices that are set up in Ghana. This, you already have your business registered or domiciled in another jurisdiction. You want to set up a small branch or office or an extension. That is what we refer to as external companies. To do the registration, you will need an incorporation certificate of this company. Its regulation, constitutions, among other things. Of course, you also need a notarized statement setting out the name and object of the company. You also need a notarized statement setting out particulars of the owners of the companies, any charges that the companies has issued in favor of its creditors or financiers. And of course, you need to make a determination whether the beneficial owners are politically exposed persons, whether in Ghana. This is in line with the International Anti-Money Laundering CFT requirements. The company in Ghana also need to have an address, and they also need to indicate its address abroad. And also the company need to have a local manager, somebody who would manage the affairs of the branch. And of course, the number and value of authorized issue shares. All of this relate to the main mother company, if I may refer to it as such. And the thing is that all these requirements can be contained. The forms are there. You can download them online, fill them, complete them, and then of course, then you then attach the necessary evidence, certificate of incorporation, and so on and so forth. And then you get, you can start the process of registration at the Registrar General. You don't necessarily have to create all of these requirements anew. The Companies Act, for instance, has provided sample template of constitution that may be adopted by the company. You can vary it as you deem it for necessary. Down with the source, basically that is the incorporation registration. Now we talk about the statute registration. Like I said, the statute registrations are registration requirement for all businesses in Ghana. It includes registration with the Ghana Investment Promotion Center, the Ghana Revenue Authority, like Ali mentioned, for tax purposes, SNITS for social security purposes, similarly NPRA for second and third year pension regulation. And of course, you need to register with local authority by way of getting business permits for your activity. So these are just localized permit requirements. If you happen to set up in Accra, you would get a business permit from Accra Metropolitan Assembly, for instance. So basically, this requirement applies to all companies, and the registration is done either before you start operations or in the course of your operation. Ideally, you should do it before. Now we talk about GIPC. Like I said, the number of institutions are many, but I want to zero in and highlight a bit more on some key three ones. GIPC is one of them. So the GIPC, like we had last week, was formed to promote and encourage investment in Ghana by, among other things, creating is attractive incentive framework for investors. So basically, under the GIPC Act, all businesses set up in Ghana in which non-Ghanaians have an interest as shareholders need to register with the center. And similarly, wholly owned Ghanaians are encouraged to register with the GIPC. This is basically because of some of the incentives that you get when you register with them. That is, if you're a Ghanaian, these incentives similarly apply to non-Ghanaians. And then having registered, every 2 years, you need to renew the registrations with the center. So what are the requirements for registration? Earlier on, I mentioned that the capital can be either cash or non-cash. So under the GIPC Act, there are prescribed minimum capital requirements for companies that are foreign owned, whether in whole or in part. So if you go into a joint venture arrangement with a Ghanaian and you happen to be a non-Ghanaian, the requirement is that you need to have a minimum capital of 200,000 USD in city equivalent. If on the other hand, you as a foreigner want to be the wholly owned owner or the only owner of the company, then you would need the city equivalent of 500,000 cedis as your capital. If on the other hand, you want to, these are for any other industries. If you want to go into trading, buying and selling, importing and selling locally, the requirement is that you should have a city equivalent of 1 million United States dollars. And the GIPC would register your company if you show evidence that this money has come. Normally, the procedure is that you set up the company at the Registrar General. Subsequently, you open a bank account either by yourself or the promoters. Money come in, and then the bank will write to Bank of Ghana confirming receipt of this. The Bank of Ghana would in turn write to the Registrar General telling them that the capital has come, and then they would do the registration if you satisfy other requirements. If on the other hand, the capital is not necessarily in cash, but you introduce some other non-cash equity by way of equipment and what have you, then you need to have evidence of the import of these, the importation of these items into the country that is similarly channeled through to GIPC through Bank of Ghana. But the one thing we need to also realize is that the minimum capital requirements do not apply to Ghanaian non-nationals who lose their citizenship because they've acquired the citizenship of another country. Earlier on, I saw a question from one of our brothers or sisters asking whether dual nationals can register in Ghana. In fact, non-nationals can register. Similarly, if you are a dual national and you even lose your Ghanaian citizenship, the law is saying that you do not necessarily need to meet the minimum capital requirement. Secondly, also, if you happen to be a spouse of a resident Ghanaian and the spouse in Ghana, the marriage is 5 years or more, then the company doesn't need to meet the minimum capital requirements. And of course, when you set up your company for with the object of going into manufacturing and export businesses, then you do not, whilst you need to register with GIPC, you do not need to meet the minimum capital requirements. So you can set up your export or manufacturing industry or company with just one cedi, $1. There's no specific minimum requirement. These companies are normally given additional incentives by the Free Zones Board. We will see just briefly some of those benefits. So having registered with GIPC, one may ask, what are the benefits that may accrue to you as an investor who has registered with the center? The first guarantee is that your company is free from the risk of expropriation or nationalization by the government. Bygones, we all know what happened in Africa and Ghana where businesses were taken over forcefully. This is a thing of the past. Once you register, there's no chance that this is going to happen. And then secondly, when you register with the GIPC, you are guaranteed free transfer of dividends that you make from your profits from business. If you happen to also borrow money from abroad, you are allowed to make repayments of these loans through transfers. Of course, when you feel like liquidating the company or selling the company, when you do that and you happen to have registered with GIPC, you are at liberty to freely transfer the process out of jurisdiction, of course, subject to the payment of appropriate tax. And then also another advantage you have or benefit of registering with the GIPC is that if in the event of any dispute between you as an investor and the government of Ghana, and the law prescribes that if you happen to come from a country where we have a bilateral agreement, we would apply the international UN sanctioned arbitration rules. If on the other hand, you come from a country where there's no such bilateral agreement, they will apply the Ghana arbitration, the Alternative Dispute Mechanism Act 2010. Another benefit of registering with the GIPC is that they facilitate your immigration processes for your expatriate staff. So if you happen to have a capital of between 150,000 and 250,000, you are entitled to one automatic immigration quota. This is free. You don't need to apply. It's automatic. If your capital is between 250 and 500,000 US, you get 2 automatic quotas. If it's between 500 and 700, it's 3. If it's above 700, you have 4. Having gotten the automatic, it doesn't mean you are excluded or prevented from getting additional immigration status. You can apply to the immigration service for immigration status, work permit, resident permit for your staff beyond these quotas given to you. Of course, the center also supports you and guides you and facilitates your activities, especially where you have to relate to other government institutions. So you set up your business, you need support with, say, Land Commission. The GIPC should be in a position to guide you. If you need support from any other institution, they are in a prime position to be able to support you. Of course, once you register, then with GIPC also, it means that you are very visible to the institutions. You are protected, so you will be free and protected against discrimination when you are in Ghana. So what are the registration requirements for GIPC? I mean, registration requirement of GIPC is very short. It's just about 6 or 7 page forms that you fill indicating particulars of your business, capital, the number of staff, among other things. Then you also have to attach your incorporation document, the certificate of incorporation, certificate of commencement, and you may not get a commencement depending on how the Registrar General behave, because you are not allowed to commence operations before you have gotten GIPC license or permit. So if you happen to be a non-Ghanaian, you need to get this before they give you the. But once you send them the certificate of incorporation, you send them your constitution together with all these documents. Like I said earlier, on evidence of the fact that you have actually brought in the capital into Ghana, that you pay the prescribed fees, they will register it. One astonishing thing for me is that the law, the GIPC Act prescribed that the center has 5 days within which to register companies once you meet all the requirements. I can attest to the fact that I have done some registrations with GIPC. It took me about 2 days maximum because they are very proactive once you meet their requirements. The last but not the least category of the registration, like I mentioned, is those we call supervisory related registration. So these are sector-specific registration requirements. We have outlined a number of them here, Bank of Ghana and so forth. The idea is that you are playing in this particular industry or sectors, many of which are very sensitive. So there's a need for regulation, and there's a need for you to be supervised such that not only does your business survive, but the economy at large also benefits. And the lists are very long, it's not exhaustive. We'll speak briefly on the Ghana Free Zones Authority. So the Ghana Free Zones Authority is one of the agencies of government. It is mandated to, among other things, establish free zones in Ghana for the sole purpose of promoting economic activity and development. The key object of the Free Zones Authority is to promote the processing and manufacturing of goods for exports. So when you set up at Free Zones Board, like I said earlier on, when you are into manufacturing and export, then the minimum capital requirement does not apply to you. You are at liberty to register with the Free Zones Board, and the only catch is that when you register with a Free Zones Board, you need to export about at least 70% of your processed or manufactured products out of Ghana. The other 30%, you can sell them locally in Ghana. So the idea is just promote manufacturing industry and of course to the export industry so that we can get a foreign currency. Currently, we have 4 free zones in Ghana, in Ashanti region, Tema, Sekondi, and Shama. And so just like the other institution, GIPC, when you register with the Ghana Free Zone Authority, certain incentives accrue to you. One of such incentives is that the Free Zone Authority would help you secure your permits, not only from them, but from any other related agency. If, for instance, your activity requires approval of EPA, the Environmental Protection Agency, the Free Zones would help you. If you need any local permit, they are in a position to help you get this permit so that you can start your business. They will also give you logistics and support. They have service lands and utility where with the utilities. You can go in Tema, they have Free Zones Board where the lands are fully demarcated, they are serviced and utility are already in place. It's just a matter of you moving in and starting operations. They will also support your business to obtain work permit and resident permit, just like the GIPC would do if you register with them. And Ali would allude to this. You also have exemptions on import duty for materials that you import into Ghana for processing or manufacturing of other products. There's also a 10-year tax exemption on corporate tax. So for 10 years, you are exempt from paying corporate tax. After 10 years, according to the Free Zones Act, the tax is limited to 15% maximum. You can pay withholding tax on your dividend before if you want to repatriate it. There's of course a relief from double taxation. Dr. Ali has mentioned the regime for double taxation. The Free Zones Authority would support you and assist you to make sure that you navigate some of these requirements. Of course, you also have a waiver of import licenses. If you want to import items for raw materials, you don't need to acquire specific license for that. Similarly, like the GIPC, once you make profit, you make declared dividend, you are entitled to repatriate it to your country of domicile. You can also repatriate technology fees. You can also, like I said earlier, and when you raise funds through credit, you can repatriate money for the servicing of these facilities. You are also guaranteed, just like the GIPC, against nationalization and exploration. So in conclusion, I would submit that we are, like we say, we do have a very elaborate legislation and institution, many of which are evolving and innovating and are poised to support investment in the economy. These institutions are largely and conduct their activities as enablers of investments and business operations in Ghana. The paradigm shift has shifted from pure regulation enforcement to enabling activities in Ghana, and many of these institutions are following the trend. Of course, like I said, they are employing technology to make sure that transaction between investors and the institutions are as seamless as possible in order that the burden on you investors is decreased to the barest minimum. For instance, you go to Registrar General, they are now trying e-filing, among other things, with a view to reduce the human contact. So you can upload all your documents there and then they would process it for you. Naturally, it's having some teething problem, but I think given the length of time, I'm sure they'll be able to improve some of these bottlenecks and then get a very seamless online registration processes. Of course, many of these our regulators and institutions have adopted some international best practices in the way they study their mandates and functions. I can speak about Bank of Ghana, I can speak about other institutions, SEC, and what have you. And the last but not the least, we also see some evolving collaborations among these regulatory institutions. Even though there are many, there's a lot of collaboration. If you go to Registrar General, you can acquire your tax. There's a desk for the Ghana Revenue Authority. You can acquire your tax. You go to GIPC, they can facilitate any other requirement you will need to satisfy in order that you are able to do your business. Last but not the least, you go to the, like I said, Free Zones Board. They also can facilitate any other permit or registration or requirement that ancillary institutions may require of you before or in the course of your business operations. So by and large, these are some of the things that we are doing as a nation, and I believe at the end of the day, your investment in this country would be well protected. Thank you very much.
Thank you, Mr. Mukhtar. Another very detailed and informative presentation. So I have a bit of an echo here. Mute. Fantastic. So very, very detailed presentation. Mr. Mukhtar is actually an executive here at the Bank of Africa. He's the head of legal services and company secretariat. As last week we had Akofa Dakwa, who also provided us with some insights on the macroeconomic view of Ghana. So you can see the Bank of Africa has a very well established team to support anybody that wants to come into Ghana and look at investments and business opportunities. The numbers are rapidly creeping up. We now have over 80 people on the line, so I'd just like to welcome everybody once again. Good evening or good afternoon or good morning, depending upon where you are in the world. And I'd also just like to say another thank you to Mr. Kobi Anda, the Managing Director of Bank of Africa, for organizing this three-part webinar series. And another thank you to Mr. Kuston for bringing together all of these fantastic and inspired members of the diaspora to come and hear about the opportunities here in Ghana. I'd also like to just welcome Mr. Youssef Bahrain. I'm probably saying his name incorrectly, I do apologize. Deputy Managing Director of Business Development at the Bank of Africa. So he's just joined us, so you're welcome, sir. So we're going to move into another presentation, but I think that the last presentation answered our very big question that seems to be popping up on the platform here, and some questions that were submitted before. The highlight of the last presentation was that if you're a Ghanaian national, the regulations and the laws that apply to foreign investors do not apply to you. So you don't have to come in with a minimum of $250,000. So I'm sure that's a huge relief for everybody that's on the line. I'm seeing lots of smiling faces. And there's somebody in particular I knew was very eager to hear that information. So as long as you're a Ghanaian national, even if you now have a British passport, a US passport, a Dutch passport, whatever the case may be, if you're a national, the laws do not apply. So that's a huge reassurance for those of you in the diaspora. Okay, so we're now going into our final presentation. I'd like to welcome Mr. Kalis Badu, who is going to be speaking a little bit more on the structure and regulatory environment here in Ghana. We make sure that you still have your notepads out, because this one is going to get a little bit technical, I would imagine. So, Mr. Badu, are you ready to take over?
Yes, I am. So thank you very much, and you are all welcome once again. The topic is a very broad one, so we would focus on the ones that are relevant to us. But because this paper can also be used for research purposes, I have attempted to create a list of all the laws that will affect you if you are investing in Ghana, and you can read them later on. So my overview will be, first I'll look at the general framework consisting of all the laws affecting the insurance sector, banking, securities, pensions, etc. And then I'll narrow down on banking and non-banking. Then I'll move into the securities industry or the capital market. And then I'll do some developments in West Africa, and then best practices when you end up in trouble in terms of dispute resolution. So you have the list of laws right here. So first you have the Bank and Specialized Deposit Taking Institutions Act. We have the Non-Banking Financial Institutions Act. There's a Deposit Protection Corporation, so that if you lose money in your savings, there's some minimum amount that is guaranteed to protect you. Then we have the SEC Act and the regulations. Then we have some specialized regulations on unit trust and mutual funds. And these are collective investment schemes that people with very low amounts can get in. Then we have a new Payment Systems Act that was passed. Now fintechs and technology companies are becoming very relevant. So there are people who are providing services in terms of platforms for payment, and that is regulated by the central bank. We've also moved into full dematerialization of securities. So we have the Central Securities Depository Act. Now, when you buy shares or instruments or securities, you no longer receive any paper instruments. There's just a book entry, electronic book entry, and you can track it. Then we have the Pensions Act, the Insurance Act, the ADR Act, our Courts Act, the New Companies Act, and then this year we had the Corporate Insolvency and Restructuring Act. That also takes care of companies that go into trouble or crisis. Now for the banking, of course, the law is that if you're a bank, then you can take deposit. That's your basic business. They take deposit, and you must have a license for that. But right after the banks, we also have what we call the other deposit taking institutions. So that will comprise savings and loans and microfinance institutions. And basically the difference is in capital requirements and the scope of activities that they can engage in. Now we had the Non-Banking Financial Institutions Act in 2008, and this deals with some specialized non-banking activities within the financial sector. So if you take a look at Section 2 and Section 4, at the first schedule of the Act, you see the list of businesses that you can engage in terms of non-banking. They include leasing operations, money lending operations, money transfer services, mortgage finance operations, non-deposit taking microfinance services, credit unions, acceptance houses, building societies, and discount houses. So these all fall under non-banking, but they are still regulated by the Bank of Ghana. So when you come to banking, and you invest in a bank or you save monies with the bank, what is the security for you as an investor? as I mentioned, Act 931 that was passed creates some kind of a minimum amount for people who lose monies in banks that collapse. Currently, the amount is about 6,000 cedis, which is not very good, but it's supposed to provide a minimum threshold to protect vulnerable savers and investors. Yeah, so we now see the securities industry or the capital market that is heavily regulated by the SEC. And the SEC has over 26 licenses. So I'll just focus on the few that are relevant to you. Definitely you'll be interested in unit trust and mutual funds. And you also be interested in things like investing with fund managers and then investing through brokers. And then the third branch is the collective investment schemes. These are basically a pool of funds. So you have maybe 50 cedis, you want to invest the 50 cedis, you want to buy Stanchart shares. And Stanchart, the one single share is about 500 cedis. Your 50 cedis cannot buy it. So you pool together the funds and then the manager can buy the share and then split the dividends or the capital gains and other things that come with it to you at the point of maturity. Then we have broker dealers who deal or buy shares or do trades on behalf of clients. You can't just walk into the stock market and trade. We have what we call the licensed dealing members who are usually registered with the SEC and the Securities Exchange, which is the stock exchange. So they are also required to have certain minimum standards in terms of professionalism and conduct, and you have to buy these instruments through them. Yeah, so now we come to the markets. Within the securities industry, there are 4 markets. We have the main stock exchange, we have the Ghana fixed income market, we have the Ghana alternative exchange, and then we have the Ghana commodities exchange. So I'll take them one after the other. The Ghana Stock Exchange is the main stock market. It deals mainly in equities and in a variety of areas. We have banking stocks, we have stock, oil, we have agri, we have gold, we have manufacturing, electronics, dairy processing, telecommunications, etc. And as at 2 days ago, the market cap was around $9.1 billion. And the main market, as I said, just consists of stocks of shares that are listed on the market. Now, before this slide, I think there's a worry about restrictions on investments in the capital market. Some time ago, we used to have restrictions or thresholds for foreigners. Currently, all those restrictions have been removed, except that when you are dealing in a banking stock, because banks are sensitive to the economy in general, when you are acquiring what we call a significant shareholding, and Section 156 of the Act defines a significant shareholding as 5% of the voting capital of a bank. That one you need approval from the Bank of Ghana. That appears to be the only restriction that you have. But aside that, there are no restrictions at all. You can repatriate all your capital that you invested. You can repatriate all your capital gains. You can also repatriate all your dividends and related earnings. All must be done without any problems with anti-money laundering. But there is unrestricted transfer of all gains that are made on the market. Now, the Ghana fixed income market, it was realized that attention was not being given to the fixed income securities. And these are instruments that are usually created by government, like bonds, and other blue chip companies in Ghana. And if you mix them with stocks, then you have a problem, because stocks are equities and these are debt instruments. So there are some people who want to fund their companies with debt. So what they do is that they have now a separate market that is administered within the same stock exchange. So you can buy these instruments and you buy them through the central depository and through your brokers. The next market is the Ghana Alternative Exchange. This is a market that was created for small and medium scale startups, because we realized that a lot of the requirements for listing on the main bourse were very burdensome. You need to have 5 years financial history. You need to have advisors, transaction advisors, lawyers, accountants. These small businesses couldn't afford that. So they decided to create a smaller market. And here, the rules for listing are very flexible. Your stated capital is only 250,000 cedis. And you also have access to a support fund that will help you list. So in terms of paying your professionals, the lawyers, the accountants, the transaction advisors, all that can be supported by the listing support fund. And there's deferred upfront payment, so you don't have to pay all back. And I think the last time I checked, you're paying a percentage of, I think, 2% interest on it. But listing and application fees are also waived. So those who have small companies who want to grow them, but they're unable to grow them, they can use this medium to get into the market. As you grow the company, you realize that if your capital goes up, things are good. You can move now onto the main market and play with the blue chip companies there. Then, what are the protections that you have within the market? Section 174 and 194 of the SEC Act provides for the setting up of a fidelity fund. So if you invest your money within the market, there's a fidelity fund. If something goes wrong, you can access the fidelity fund, and it's administered by the stock exchange. The last time I checked, I think it had about 5 million CDs in there. Then the stock exchange, including the brokers, are also supposed to take professional indemnity insurance. So you shouldn't be worried if a broker is going to mismanage your funds, because the insurance is going to cover for that as well. Now we'll move to the Ghana Commodity Exchange, which is the last exchange that was established. It was done around 2015. It's been operating for some time now. We also realized that there were problems with farmers. Farmers farm the whole year, they harvest. Sometimes they can't even cut the farm produce from the farm, to the farm gate and then to the warehouses. They didn't even have warehouses. So we decided that it was time to create a commodity exchange. What this exchange does is that it guarantees you all your produce a specific price, and there's price discovery on the market. So the price of the product, a bag of maize or a bag of rice, is determined by the forces of demand and supply. So there's no manipulation over there. So you produce the goods, you let the exchange know. The exchange has dedicated warehouses scattered all over Ghana. They will tell you to move the goods there, and then they'll just pay you. Now, that's what we are doing basically now. We are dealing in maize, soybean, sorghum, sesame, and rice. But the idea is to bring in what we call a warehouse receipt system, where you have very sophisticated electronic warehouses in place, supervised. And when the products are deposited in these warehouses, a warehouse receipt is generated by the warehouse operator. Now, this receipt now becomes a security instrument that can be traded like we trade shares on the stock market. But for now, we are at the stage where we guarantee prices, we store the goods, we standardize the kind of standards that you have in terms of the moisture content, etc., etc. And then as we move on, we're going to have a more sophisticated market. Now we're also doing a spot market. We intend to go into derivatives, where the products can be bought in advance and sold in advance. But for now, we are only, selling the products now, guaranteeing farmers some good price. Then the protection there is also that the exchange has a settlement guarantee fund. So when you sell your goods, there's a settlement guarantee fund that guarantees you payment. So you don't have to worry about selling your goods or your goods being taken to the market and you don't get your money. It's assured. And the exchange is also covered by insurance. Yes, there are a few new developments in West Africa. I happen to be part of this, so I think I should share it with you. We realize that the sub-region is small, but it has a great potential. We have the Nigerian Stock Exchange, we have the Ghana Stock Exchange, we have BVRM within the UEMA countries. We all trade differently. Brokers in Ghana only access stocks or securities within the Ghana stock market. That should not be the case. We want a situation where our brokers should be able to sit in their offices and trade on the Nigerian Stock Exchange and trade on BVRM. So what we did was to set up what we call the WACMIC, the West Africa Capital Market Integration Council, which is made up of the stock exchanges within the West Africa sub-region. They came together, they created some rules, they created their own charter, and currently we're at phase one. Phase one is known as sponsored access. So with sponsored access, now Ghanaian brokers can buy stocks in Nigeria, but they need to be sponsored by a Nigerian broker. So you use the Nigerian broker's account to be able to trade. But eventually, we want, when we go to phase 2, we're going to have direct access, and the Nigerians and the UEMOA countries can also access our stock market. This is just meant to deepen, could you move? This is just meant to deepen the capital market and provide more products for brokers to constitute a portfolio that will return very high returns for people. In 2015, the securities industry realized within West Africa that their licensees, which comprise the stock exchange and the various capital markets, have come together under WACMIC, but they are operating without supervision. And you know, if you are in your country, you have a supervisor, which is the capital market regulator. Nigerians have it, Ghanaians have it, BVRM, they have it. So if you go cross-border, you should still have a supervisor, because we don't want situations where we're going to have bubbles. So we have the West Africa Securities Regulators Association that brought together the regulators as well. As we speak, what we have done is to create a charter. We have designed some rules for fixed income securities. So now you can have institutions within Ghana, institutions within member states, special purpose vehicles, supranational organizations like IMF, World Bank, West Africa Monetary Institute. They can all come into the market and raise capital across the 4 regions. What happens is that once the prospectus is prepared, the home regulator takes it, reviews it, and sends it to the other regulators who would indicate there are no objection. And the capital is raised, and then the stock is listed across board so that there's liquidity, which is currently lacking in our market. Next. Next. Now, should you run into problems, there are also dispute resolution mechanisms, and these are of international standards. So currently our Courts Act, the court rules also, both the Court Act and the court rules recognize foreign judgments. So if you have a judgment in a country, you can come and enforce it in Ghana. It's the same way if you have a judgment, because it's based on reciprocity. You have a judgment in Ghana and you cannot come to Ghana to enforce it. You can also enforce it within the countries that have been specified. Next slide. So you have the UK, you have Brazil. Next slide. You have UK, you have Brazil, you have France, you have Israel, you have Italy, Japan, Lebanon, Senegal, Spain. Currently, these are the countries that we have reciprocal agreements with, so you can enforce both ways. Then also, business people usually would not like court processes. So what they do is that they prefer arbitration. So we have also alternative dispute resolution mechanisms. And you can see that we have LI 1575 that has also recognized some 26 countries within which you can enforce arbitral awards that are issued in Ghana and outside Ghana. These countries include Austria, Bulgaria, Cambodia, Central African Republic, Ceylon, Czech Republic, Germany, Finland, France, Greece, Hungary, India, Israel, Japan, Madagascar, Morocco, Poland, Norway, Romania, Syria, Thailand, Ukraine, and Russia. So should you run into problems, you have legal systems that support you enforcing your judgments in or outside Ghana. If you don't use the court system also, and you use an arbitrator based in London or based in Russia or based in Malta, anywhere, you also have the opportunity after receiving the award to enforce it in Ghana and the countries that I have mentioned. I think this will bring me to the end of my presentation. Thank you.
Going back to Dr. Abdallah, there was a question as to why do we have 22% tax on hotels and only 1% tax on the farming industry? Maybe this person is a hotelier and they think that it's not fair. So maybe you'd like to provide a little bit of context on that. Another question around the free zones area, I think has already been answered in terms of the different locations. And Also, another question around tax incentives for very specific sectors. I think we've already spoken about that when we talked about the different percentages. And another question came in, sir, around the access to a TIN number if you're actually outside of Ghana. Are you able to go online and register your TIN number?
Okay, thank you very much. Thank you very much, Letitia. As you rightly mentioned, the location of the free zones, my senior, Mr. Mukhtar Abbas, really covered all that for us. Now, why 22% for hotels and 1% for farming? You know, the corporate tax rate is 25%. So the idea that the tourism sector was bringing in a lot of income to the state, there was the need to give an incentive by way of reducing the corporate tax for the hotel industry from 25% to 22%. If you come to farming, before the amendment to the tax law in 2015, if you are engaged in farming, you were totally exempt from even the payment of tax, depending on the area of farming. If you are into tree crop plantation, you had 10 years. If you were into maize, cash crops like maize and the rest, you were at 5 years holiday. And the idea of the removal of all the holidays was to give them a concessionary rate of 1% at least. And that is the idea and the reason why there is that differential. And you can see when I was mentioning, even with the banking sector, if you are getting revenue from leasing or farming, you also have a reduced rate of 20%. And on the specific incentives, we have location incentives for manufacturing companies. If you are located in regional capitals other than Accra and Tema, you pay 25% less of the existing tax rate. So we have a tax rebate. So instead of 25%, you'll be paying 18.75. And if you are located in other areas other than regional capitals, you pay 50% less. So you pay 12.5. So you just move a little away from the region and you have a benefit. And then also agri sector, as I just mentioned, the 1% concession during the tax holiday. And if you engage in rural banking, you also have 1% you pay for the first 10 years. And then if you're into waste processing, you also have 7 years in which you pay only 1% and pay the normal rate only after the 7 years. Same for if you are engaged with government to put up low-cost housing, you have 5 years within which you are paying only 1% instead of the 25%. And if you are also operating an approved unit trust scheme or mutual fund, as the last speaker mentioned, then you are also enjoying a 10 years during which you pay only 1% as your corporate tax rate. Venture capital financing companies also have 1% for 10 years. And then there is also the carryover of losses. When you make a loss in your operations, irrespective of the sector you are, everyone has generally 3 years to carry forward losses you incur. But if you are in the specified industries, which are mining, manufacturing, petroleum processing, agro-processing, ICT, and then tourism approved by the tourist board, you can carry forward your losses for 5 years before you start paying any tax. Then the information needed to file returns was asked. You need your taxpayer identification number, audited financial statements, and then you complete the relevant tax return forms. And if you want more information on the return forms and all that, you just go to www. You can also go onto the Registrar General's website, download the TIN application form, complete it, and then you sign. When you scan and send down here, anybody you are dealing with, a lawyer or any representative you have, you attach the details page of your passport, and that is it. They'll get you a tax identification number. Because foreigners who want to even establish get a TIN. So the idea is that some people think once you have a TIN, you pay tax. No, it is just for the database. So when you start earning income, it becomes easier not to wait. When you start earning income, you now want to register with a GRA. So it doesn't give rise automatically to tax. Thank you very much.
Abdullah, I just want to come in with another question on that
Okay.
note about paying tax as soon as you register your TIN. I use internet banking, and now every time I log on to my internet banking account, they're asking for my TIN number. I was a little bit suspicious initially as to why they'll be asking for my TIN number, but is there some kind of idea in place or some kind of strategy for them to start tracking people's inflows?
Yes, if you take the Revenue Administration Act of 2016, Act 915, there is a list of activities if you want to engage in, you need to produce your TIN. And one of them is what you've mentioned. So even now, when you want to open a bank account, and those who already had accounts before the TIN system came in, the banks write to them to request for the taxpayer identification number. So there are a lot of activities, registering a land, buying property, dealing with the government. There are a whole lot of institutions listed in the schedule to the act that before you can deal with them, even winning a contract from government, they want your taxpayer identification number. It's a way of building the database and be able to track. If you are not making any gains, of course, no tax is being paid, but it helps us to know the extent. If you listen to the debate, we have a population of more than 8 million taxpayers, but we have only less than 2.5 million who are registered for tax purposes. So you think to wonder, how do they widen the tax net to ensure that all those who are earning income and have to pay tax really pay? So the idea is to look at the database and be able to get all who have to comply with the law to comply.
Okay, thank you very much. And I just have one final question for you, but I also just want to assure all of the people out there in the diaspora that our power supply is now very stable. I know we just had a very short hiccup, but I've just seen a comment on the chat to say that the power keeps going off in Ghana. We've moved forward tremendously since 2012. So I can assure you that it's not a regular occurrence anymore. But one last question to you, Dr. Abdallah, is that what is the tax rate for power production or feeding power into the national grid? So if you're in the power space, what is the tax rate that you'll be looking at paying?
Thank you. Unfortunately, they don't have any special concession. They are still at the 25%. And these are some of the issues we keep raising, especially when you look at the question from the one on the hotel. I have made the same observation that at the time they got the reduced rate of 22%, the corporate tax rate was around 28%. When it came down to 25%, I wonder why the industry did not make any representations before government for an adjustment down to say 20%. So sometimes the operators in the industry leave the impression that all is well with them, and their challenges are not the tax rate. It could be something else. And so sometimes I think that the industry needs to make representations. Like you just asked, the power producers, initially they were considered as manufacturing companies, so they could get benefits that manufacturing companies used to have. But the definition of a manufacturing company has been amended. So they are no longer treated as manufacturing companies. Interestingly, they've not raised any concerns. And I think they should, because they are losing by way of a lot of benefits that manufacturing companies could get. For example, location incentive. And most of them are beyond Tema. The Pong area is regarded as a rural area. So they are to pay 12.5%, not 25%. And that is why I believe it was amended to rope in more revenue. But they should have made a case for consideration. So that is one area that we would advise. Any sector you want to go in, it depends. You may come together as an industry or a sector to make representations before the Ministry of Finance and the GRA. It will be taken up in the tax policy process. An amendment may be made to ensure your business grows. Thank you very much.
Thank you very much, sir.
You're most welcome.
Insightful responses there. Just a very quick welcome to Mrs. Fatimatu Gaku, who's actually the Deputy Managing Director of Credit Monitoring and Control here at the Bank of Africa. She was part of a fantastic presentation that we had for women-owned business leaders just a few weeks ago. So Fatimatu, thank you very much for joining us this evening. Okay, so now jumping into some questions around registration. And people want to know, is the process now fully digital? Can you sit behind your laptop and register your business in Ghana? And what is the cost for registering your business?
Okay, in terms of digitization, we are now beginning the process. We haven't really fully evolved it. Now there's a link where you can go there, download the forms, and then upload it. Unfortunately, invariably, you need some human intervention. Otherwise, the registration may not go through. That is at the Registrar General Department. In terms of costs, the starting cost is 0.5, if you're a limited liability company, 0.5% of your capital, which you pay as stamp duty. And then you pay, I believe, 130 Ghana cedis for the certificate and an additional 100 cedis for the constitution. It varies depending on your capital. Like I said, 0.5%.
Thank
tax.
you.
Yeah.
And I guess that the other question that's coming in around that is there a requirement to renew every year? If you register a limited liability company, do you have to renew your registration on a yearly basis? And is there a cost to it?
No, there's no renewal requirements. Once you register as a limited liability company, you are registered for good. The only thing is that on annual basis, you file your returns, what we call annual returns. Essentially, you are telling them as at December in a particular year, this is a situation, these are your directors, these are the shareholders, has there been any, if there have been any share transfer in the course of the year, you inform. Essentially, you are updating them, and the cost is just 50 cedis.
Okay. And the registration process, is it the same for not-for-profit organizations as it is for limited liability? I know that we spoke a little bit about charitable organizations. To be honest, I'm not too sure if there's a very clear differentiation between the two. However, some of the participants would like to know, if you have a not-for-profit, if you have a foundation, does the same registration apply? And maybe also just to chip in as to whether the same tax requirements apply as well.
So in terms of registration, the incorporation, you more or less go through the same thing at the Registrar General, except that some of the requirements vary. You may not necessarily need capital because you are not setting up with shares. You may not need directors. Instead of shareholders, you have subscribers. And so basically that is what it's about. At the register, I don't believe you need to register with the Ghana Investment Promotion Council, because center, there you are, that is essentially for businesses set up to make profits.
Okay, fantastic. Thank you very much for that. Now, some questions are coming in from the members and the team behind Guardia around forming a mutual beneficiary corporation in Ghana. They would like to understand the processes and maybe tax implications for that.
I believe to be able to answer this adequately, we need to understand clearly the status of Guardia in terms of their incorporation status, in terms of the objects, among other things. Of course, they need to also let us know their privilege, whether to set up a subsidiary, whether to set up as a branch. So the answer varies depending on these dynamics. I will defer to Ali on the question of tax.
Thank you very much, Senior. On the question of tax, like you rightly said, it depends on the objects and what they intend to do. Because under our tax laws, I've run through the various types, whether they are a charitable organization or whether they are a trade association, whether they are a club or whether they are a friendly society. So whichever they belong in all these categories, they are exempt from the payment of tax, except when they engage in a business that is taxable. Because when they are a trade association, for example, their main source of revenue will be subscriptions and dues from members. And so that doesn't make them liable to tax. But if they decide to engage in an activity that brings them income, they will have to pay tax on that activity, and the remainder, they can put it into their activity as Gadia. So as my senior mentioned, we need to know the objects, but if they are in the nature of any of these three, charitable organization, trade association, a club, a friendly society, they will not be liable to tax once their income is not from business. Thank you very much.
Thank you very much.
You're most welcome.
Maybe I can ask you to come in here. We've been having several discussions behind the scenes in relation to Gadia, as a lot of the members are very interested in making some investments in Ghana, either through investing into organizations, as in businesses, business opportunities, or investing into mutual funds. So maybe you can just provide us with a little bit of idea around mutual funds and the benefits, and probably the tax implications there as well for people that may not be residents of Ghana.
So if you have inflows into Ghana, you want to invest, there are a number of areas. As I said, you can directly go to a fund manager who has a specific fund targeted at your interest. So for example, we have different types of mutual funds. We have growth funds. We have some that are mostly fixed income. We have some that are balanced. So the focus of the fund may either be 70% secure, so they invest in government securities and fixed income, and then 30% in equities, so the risk level is very low. You have also other ones that are aggressive, so they have about 70% of the portfolio in securities that are listed, and you know that with security there's a lot of risk because there's a lot of movement up and down, and 30% in government securities. Then we have those that are balanced, so 50 here, 50 here. So depending on your risk appetite, depending on your horizon, you may want to choose a specific fund managed by a fund manager. Now, currently the SEC, the new law that the SEC got in 2016 allows for creation of private equity funds. So the SEC has issued some guidelines for private equity funds. But these private equity funds are usually set up only for people that we classify as qualified investors. So these people must know their left from their right, because private equity is highly risky because the approach is aggressive. They want more interest, more returns, and the higher the return, the higher the risk. So it is usually set up for people who have knowledge in the industry, they know the risk level, and they are prepared to take that risk. So they can come also into private equity. That's another area. Then others can engage brokers who would buy directly from the stock market. And again, we need to know their KYC, we need to know their investment appetite, we need to know their risk level, their investment horizon, etc. Then the broker will tell you which kind of stocks are good for you. And this will all be done on the back of the multiples that we have, the kinds of the indices we use in measuring securities, whether securities performing well or not, the price earnings ratio, the dividend ratio, all those ratios are considered. So it depends really on the focus of the fund. What do they want to do? Are they just looking at a safe haven to invest something that is not so in something that is not so risky? Then I would advise that a mutual fund is safer, because if you look at the LI 1728, there are thresholds with regards to the kinds of investments that a fund manager makes. So you can't go beyond a certain level. So you don't have a lot of failures within the collective investment scheme setup. But if you go solo to buy directly on stocks, because with the stocks, the broker does not have control over the movement of the share price. It depends on what is happening in the company. It depends on the news that the company is putting out. It depends on new developments that the company is doing. So if you go that way, then it means that you are good enough to take that level of risk. So it will all depend. We'll need to know their objects and their risk appetite. And then we can direct. Some may not have any risk appetite at all. They may just want to go into government treasury bills. And in that way, you just have to liaise through your bank to buy it. And the account is created in your name, sitting at the Central Securities Depository, and you can monitor what is happening.
So, Mr. Badu, what about unit funds?
Yeah, unit trust.
Unit trust, sorry. Unit
yes,
trust.
with unit trust, they are just a variant of collective investment scheme, except that with mutual funds, there are companies that are set up to run the scheme. So you are shareholders. But with the unit trust funds, they are set up with trust deeds. That's the main thing. And what you get is what we call the units. So you have one that is just in units, it's not a company, and then you have one that is units in a company. Now, with the mutual funds, if I may explain, there are two types. We have what we call the open end and the closed end. With the open end schemes, there are schemes that issue more shares as there's demand. Because of that, there's liquidity, there's always trading. So you have people buying and selling, and the prices are moving up and down, and there's activity in the stock. With the closed end, they set up a certain limited number of shares and they issue it. If you hold the shares and you don't want to hold it again, you send it back to the fund manager and then he pays you. So it's closed. But those ones, because there's no liquidity, they are required to be listed so that there can be activity in the store. So that's the main difference. But they are all targeted towards collective pooling of funds for people whose monies are not that big for them to go directly to invest. Yeah.
Fantastic. There was a question that came into the chat box asking as to whether you can start as a sole proprietor before becoming a limited liability company. And the answer to that is yes. I think Dr. Abdullah has already given us a response there. So just to take note for the rest of the group, if you're wondering whether that's an option for you, yes, it's advisable to start as a sole proprietor before going ahead to register as a limited liability company. Somebody's also asking whether there's a collaboration or communication, I'll probably say, between the Registrar General and the GRA to ensure that companies are registered properly and actually paying their right taxes. I'm not too sure how effective that communication link is, so maybe I would hand over to one of the panelists to respond on that.
Thank you very much, Letitia. Indeed, that is the reason why the taxpayer identification number was introduced. Because if you look at the data of companies or businesses registered by the Registrar General, it doesn't come anywhere close to the number of taxpayers who are registered with the Ghana Revenue Authority. So the taxpayer identification number is linked in the sense that at the time of registering a business, you can be issued the taxpayer identification number by the Registrar General. You could also get it registered by the GRA. So the system is linked. And if the GRA goes in, it's able to know those who have been issued a TIN by Registrar General. And Registrar General is also able to know. Now, the issue of whether they are paying the right taxes is still what is outstanding, in the sense that they are facing challenges where a taxpayer can be seen to be having more than one taxpayer identification number, which the system shouldn't have allowed. So the person changes the name and gets a TIN, changes another name. So he does business with some of the TIN and changes contracts with another name. It's very difficult to track. And if they can audit the system, I'm sure all such duplications can be found out and resolved. So yes, we still have a challenge in trying to use the TIN to make sure everybody complies, which is why, as you mentioned, Letitia, when you log on, it requests for your TIN. So then it will track all your transactions. If it doesn't add, then if you don't supply for certain transactions, that income cannot be traced. So that is the challenge. Most grateful.
And there's been a couple of questions as to whether we can recommend, professionals to support with this process. Dr. Abdullah and Mr. Baidu are both, well, Dr. Abdullah is a tax attorney. So if you need any professional services in that area, you've had a taste of what his knowledge base and what he's capable of. So we can make those referrals. And then we also have Mr. Baidu on the line, who's also a securities and investment lawyer. So I think that you're in safe hands today. So if you need any additional support, they're both professional consultants. They'll be able to support you offline. We've gotten through all of our questions. Unless there's any final comments from any of the panelists, we'd like to bring today's session to a close. I'd like to thank the team at Bank of Africa once again. We had on the line Fatumatu Gaku, who's the Deputy Managing Director for Credit and Monitoring Control here at the Bank of Africa. We have Mr. Kobi Anda, the Managing Director at Bank of Africa, and also the second Deputy Director of Business Development, Mr. Yusuf Befrahani. I think I'm pronouncing it correctly this time. Thank you very much for the support from the Bank of Africa team. And of course, we can't forget Kojo, who's behind the scenes moving the slides. Kojo's done a really great job today, keeping us all up to date with the slides. And obviously to the whole Gadia group, we thank you for being with us once again. Mr. Kusen, the visionary behind this initiative, thank you very, very much once again. If there are no, oh, okay, I'm getting another comment coming in here. Oh, it looks like it's just a thank you. And yes, we will be able to share any necessary information in the Gadia group. There was an email address that I think Kojo will put up in the chat box again. For anybody that's not a member of the Gadia Monetary Fund, please share your questions to this email address. If you could type it up, please, in the chat box. And then you'll quickly get a response to see, to answer any questions that we haven't been able to answer today. Okay, so we have the email address now. I understand there may be a challenge with it. Have we rectified it? Okay, fantastic. So thank you everybody for being with us this evening. I really appreciate your time. We'll be back next week. Next week we'll be talking about real estate. We're talking about land regulations. So once again, a very exciting discussion with some fantastic panelists. So please do join us same time next week. Thank you.